Alright, now after the new government has taken over, they have replaced GST with SST. SST is under two different tax systems. The sales tax is one act, the service tax is another act. It's two different acts. But the mechanism are more or less the same, just that the scope is very different. Now I'll start off with sales tax, and then once we've looked through sales tax, actually a lot of things are the same. So when it comes to service tax, we don't have to repeat all over again. Now, we are looking at indirect taxes because you don't pay straight to the government. You pay to someone who collects the tax and remit it to the government. Now, who is in charge with indirect taxes is the custom. So we just call the Royal Malaysian Custom. Sales tax is a tax that we impose on two things: manufacturers, importers. Okay? So manufacturer is meant for taxable goods that are being manufactured in Malaysia. Okay, manufactured in Malaysia or imported into Malaysia. Alright? Now, so in order for you to impose sales tax being a manufacturer, what you must do is you have to register yourself. So you got to be a registered manufacturer. Now, and if you need to register, then the question is there must be a threshold. Okay? There must be a threshold. So how do you calculate the threshold? Now, the threshold is based on the sales value of your taxable goods. So we only use taxable goods to measure the threshold. Not like GST those days. GST those days, even you sell fixed asset, the value of selling a fixed asset is part of the threshold. So this is only on the taxable goods. Now the threshold is still at 500,000. Okay, so it's the same limit, 500,000. Now, but we measure it on historical sales as well as prospective sales. Historical sales as well as prospective sales. Prospective sales. Okay. Now, what is a historical sales and prospective sales? Now, if you are in that month, okay, if you're in that month, now I'm going to illustrate it, okay. So if now you're looking at the month of, let's say, October 2019, that month is included. You must look back all the way 12 months. That means that month plus the 11 months before. So the 11 months before will start 1st of November 18 to 31st October 19. Now that is the 12-month sales. Look at how much sales do you have here. If your sales exceed 500,000, then you have to register yourself for sales tax. Okay? Now, when you say register yourself for sales tax, how long do you have to register? And when will you start charging sales tax? Now, you have 1 month to register. That means anytime up to end of November, you can register. And then from 1st December, you will start imposing sales tax. So that 1 month is for your registration. Then 1st December onward is for you to impose your sales tax. Okay? Now, but we don't just look at historical sales, we also look at prospective sales. That means if you measure the sales of your past, you may not exceed 500,000. You can also look at the sales of the future. Now, for example, let's say your sales here is only 300K, which logically you don't have to register. But if you are in the month of October, same period, now you're in the month of October, 19, you will look forward for the next 11 months. That means until 30th September 2020. So you're looking future 12 months from the month of October until 30th September. How much sales of taxable goods will you be getting? Now, you probably will say that, how do I know what's my future sales? Now, usually this is based on very concrete evidence, like you receive contract order. You know, there are a lot of businesses, they actually receive a lot of contract, that the contract is for the future. So if let's say you receive a contract, all right, you receive a contract, and the contract has a value that add up, let's say, is already more than 500,000, then you are under the same requirement to register. So you will have the same thing to do, register in November, and beginning from 1st December onwards, you will have to collect sales tax. Okay? Okay, so this is the first kind of registration. We call this like the compulsory registration, that you just have to do it the moment you hit the threshold. Okay? Now back to page 344 again. Now, we do have what we call a voluntary registration. But the voluntary registration is a bit different, because when you submit a voluntary registration, you must wait for the approval by the DG of Custom. So if the DG of Custom doesn't approve it, then sorry, you are not allowed to register. Okay? Okay, then there's another type of registration called Directive Registration. The title is called Directive Registration for Artificial Separation. Okay, what is this? Now imagine people are trying to cheat. Let's say I'm going to have a factory, but I made it in such a way, like I go and incorporate two companies. So I have A Sdn Bhd and B Sdn Bhd. So that eventually what happened, my revenue, right, I divide it by 2. So that I will record maybe 400,000 in company A, then the other 400,000 in company B. So the revenue is kept below 500. I don't have to worry about registration, right? Now that is an artificial separation. It's fake. Artificial is fake. Okay? There's a separation of business activity which is artificial. Now, how does the government solve this problem? Now, then the government can be under Section 15 to serve a notice to have registration be directed as one person. So they can serve a notice and say that 2 of you will actually be treated as a single taxable person and be registered for sales tax. So you have to register. Even though legally it looks as though it's 2 different companies with 2 different threshold amount, that you didn't hit the 500,000 mark, but you have to register. Now this is artificial separation. Now what will happen when an artificial separation is spotted and then that Director General and serve you a direction? Now, these are the consequences. Usually you have to provide a name, like which name you want to register. You see, like for example here, A and B. It's 2 different companies. So if you want to register your sales tax, is it A or is it B? You got to put a name, you see. So normally you have to name the person to be registered. You have a choice to do it. But if you don't do it within 14 days when direction is served, then it's okay. The name that appear on that notice will be used. That's what the law says, okay? Now, then the taxable goods manufactured by the constituent member, that means all the different parties in the group, okay, will all be treated as if they are manufactured by the same taxable person. So the goods manufactured by A and B are all treated as the same person. And all the constituent member will be jointly and severally liable for the sales tax. So everybody is liable. So the whole idea is they're just trying to merge you as one. That's it. Just understand that, okay? They're trying to merge you as one. Okay, next. Now, you need to notify the custom whenever you have any major change to particulars like the name, address, if this is a partnership, the change in partners, changing in your business status, closing down, for example, okay? If you have additional taxable goods that you make, or if you are opening new outlets, closing down of outlets, now these are examples of things that you have to inform the custom. That's it. Just inform them. It's just update them when there are changes. Okay, the deregistration part. Now, deregistration is basically an idea that you're cancelling your registration. And what will happen once you've cancelled registration? Then the goods will not be imposed sales tax. Now, when will you deregister? Now, for a registered manufacturer, either when you cease the manufacturing of taxable goods, so you stop making, okay? Okay. Or when your sales now drop, that it does not exceed 500,000 anymore. So the sales drop. Alright? The value of the taxable goods now does not exceed 500,000. Okay. You shall notify the DG. Now, if the reason is cessation, then you have to do it within 30 days from the date of cessation. Alright? So for cessation, you have to do it within 30 days. Now, the moment you inform DG, right, about that you want to deregister, is up to the DG, okay, to approve the deregistration. That's why I put here the DG may cancel the registration, may. Alright, depending on all these evidence, then you cancel. And when he do the cancellation, he will actually tells you like the cancellation will be effective when, like either the date of the cessation or the date that DG believe that you should be deregistered, he will provide you the date. Alright, so the control is from them and not from us. Now that is deregistration. Okay, coming down. Now there are exemption. Okay, there are exemption. So the whole idea of exemption is basically there are things that we'll see later, a bit more on exemption later. There are things that you make that you will be exempted. Now I just give a couple of examples here. Instead of listing down the whole thing, I just give some examples like preparation of meal, repairing second-hand goods, printing photograph, tailor, alright, installing aircon in motor vehicles. These are all exempted so that you realize that even if you're involved in all these processes, you don't have to apply for sales tax. Okay? So, photostat machine, photostat center, they don't have to apply for sales tax. Alright? So, all that is because it's under the exempted list. Okay? Okay. Now, how do you impose sales tax? Okay. Now, we only have two cases. Manufacturer importer. Remember, manufacturer, importer. For manufacturer, right, we impose sales tax by taking the sales value times the rate. The rate will usually be 5 or 10%. Now, questions normally will tell you the rate, they'll tell you. Okay? If the question is silent, we have first time, if question is silent, examiner forgot, then you just make an assumption. Let's say that sales tax rate is usually 5 or 10%, I assume it's 5% in this case. All right? You're not expected to know, like, what's the percentage for what item. Okay? Okay. So the imposition of sales tax is based on the sales value times the rate. Okay, question is, how do you derive that value? Now, normally the value is the transaction price. That means the price that you're actually selling. Normally, alright? Normally. Okay. But, if you come under cases that they say, if the manufactured goods used by that person otherwise than as a raw material in the manufacture of taxable goods, so that means you are not using that thing back to your manufacturing process, that's what they say, or if you dispose it, now this is more commonly expected in the exam, you dispose it otherwise than by sale. What do you mean by dispose otherwise than by sale? For example, you give away the stock. You donate your item. Okay? Destroy. Written off. So long you are not selling. Alright? Now, then you still have to impose sales tax at the market price as if you're selling to a non-related party. So just market value. Okay? You're going to use your market value. Now, and for related party transaction, right? If you have related party transaction, you must use value as if arm's length. Arm's length means like independent person. That means it's back to market value. So if let's say, for example, I sell this product A to outsider, let's say, the price is 15 ringgit. And let's say I sell to my sub-C, and because it's my sub-C, I'm offering you a special price of 8 ringgit. Now, assuming if my sales tax is 10%, I will impose 1 ringgit 50 cent for sales tax. Okay? Which is 10% of the 15. Alright? That's the sales tax. Now, this will also be 1 ringgit 50 cent for the sales tax. Even though you're selling at 8 ringgit, the sales tax is still 150. Now, why? Because you must use the price that you transact at arm's length. That means you're selling to outsider. Even though you can sell at a lower price, that's your problem. But for sales tax, use the market value. Okay? Now, these will be the 3 cases for those that they manufactured the goods. Okay? Now, what about for cases when you import? Now, if you do importation, right? Say for import purpose, the value is determined by custom. Has anyone been to any free zone before? Like the one in Johor, there's one. That you go into that terminal, then there's a free zone that you can buy lots. I mean, usually people there are all for the sinful stuff, the cigarette and the alcohol. Yeah, the TV. Have you ever been there?
Most airports.
No, the airport is one issue, but usually I'm talking about those free zone. Or okay, anyway, even if airport is the same lah, alright? Now, if you buy from airport, or if you go to duty-free zone, or you go Langkawi, I'm sure a lot of you have been to Langkawi, right? No, okay, never, okay, next time. College Street, Langkawi, alright? Now, so if you've been to Langkawi, right, you actually realize that they have all these alcohol and cigarette, which is like dirt cheap, okay? So if you like consume in Langkawi, there's no issue, because you just buy, for example, the beer, you drink it, that's it, finish, alright? And the beer, let's say, is very cheap, like cheaper than soft drink, okay? So let's say 2 ringgit, alright? You know, if you buy the beer from 7-Eleven, it's going to cost you like, I don't know, 6 ringgit, 7 ringgit, alright? Now, it's like so much higher. So, let's say you buy 2 cans of beer, you just assume this is a beer, and then you put it in a plastic bag, and when you leave that port, custom will stop you and ask you, do you buy any cigarette or any beer or not, okay? Now, Langkawi is different because there's an allowance. They allow you to buy once you stay there for X number of days. Let's say if you buy from free zone, you just go in for shopping only. You just walk in, you buy, you want to come out. Now, so you didn't fulfill the exemption requirement. You say, I got 2 cans of beer. You show the custom 2 cans of beer, alright? You buy the beer inside the shopping mall there is only $2. You buy 7-Eleven is $7, let's say. Now, then as you take out, right, you tell the custom, I got buy 2 cans of beer. Custom say, okay, pay duty, 10 ringgit. You're like, what? Yeah, what? Hey, I buy 7-Eleven, $7 only, you know. Why you charge me 10 ringgit? Plus 2 ringgit, hey, it's 12 ringgit, you know. So expensive. He said, yeah, then you buy in 7-Eleven. Don't take out, because when you take out, right, he has the full authority to tax you at his will. Because for import, what you're doing now is you're importing. You take the beer out from the duty-free zone, you're importing. And when you import, right, the value for duty is never based on your cost. You don't go and tell the person, you know, I buy it, you know, cost is always cheating. Right? For example, I just use simple experience that you probably have been through. You go overseas holiday, you do a lot of shopping, come back with 2 big bags, lots of things. So customer asks you, dari mana? Normally they won't even ask you dari mana because they know which flight you just come down. Alright? Wow, from Tokyo. Wow, all the cosmetic. Wow, all the mask, all the cream, all the lipstick. Wow, everything is there. Then he smile at you. He smile. He sure don't want to see, alright? He smile at you and say, semua ni berapa? They'll ask you, how much have you paid? Now, if you spend 5,000 on that stuff, how much normally you tell him? You see, Kasang is the most truthful, realistic person. She will always cut away a 0. She just tell the fella 500. You think that fella stupid or what? Alright? Wow, all these things 500, so cheap. Yeah, that's why I buy so much, you see. They take out the brand of fake one, fake. Alright, these are all imitation. See, that's why custom will never trust you one, because whatever you declare is all fake. Even the documents you make can be fake. You always under declare because you don't want to pay duties. We all know that. It's a matter of fact. And that is the reason why when it comes to duties, they don't trust you. They use their own valuation. Alright? You say, yeah, then I don't like how, don't import lah. That's it. Don't import, send back. You say, don't take it out, so you can do all that. Now, so imported value, the duty is based on what? The value that's determined by the custom plus the duty. Now, duty can be import duty, excise duty, whatever duty that you're supposed to pay, all that, then you times with the rate. Now, if you import, right, you have to pay the duty, pay the sales tax the very moment you want to take the things out from custom. We don't follow taxable period when it comes to import. That's why custom will only allow you to take the things out when you settle all the taxes. Can see now? See, if you remember, I told you before, if you import anything from China, for example, and you don't have a forwarding agent to handle for you, so what will happen is when the thing arrives, the custom will hold it. And if custom thinks that you need to pay a duty, they will not release the item. Then usually what they'll do is they send you a letter and say that your item has been held up, and then you have to settle all the duties and stuff like that. Now usually if you have that incident, you can do it yourself. You go to there, you know, if it's in Port Klang, you will go to Port Klang and do all the work. Now, but if you find this is too much of a trouble, you appoint an agent to do it. In Malaysia, one of the official agents is Pos Laju. So they will just do it for a fee. Alright, but you end up, when all these things comes in, the fee is quite expensive. Can you see that? That's why usually when you import anything, we usually try to limit the value to be up to 500 ringgit. Because anything above that, you will have to suffer problems with duty. Alright, so 500. That's why she said 500. Alright, now, so that's the whole items that we see here. Now, we can also have cases with subcontractor. Now, basically, subcontractor is you get another person to do the work and pass it back to you. Alright? So it's like you have a subcon that will do the work and pass it back to X to continue manufacture, and then you sell. Alright? So they will do part of the work and they send back to you. Now, and for subcontractor, the value is based on the amount that they charge for the work that they perform. So it's basically selling price. Okay? Okay, now let's just come down and look at the issue of taxable period. Okay? Now, when do you account for sales tax? That means, when do you impose the sales tax? Now, it's like, for example, when will the service tax be imposed on you? You go to McDonald's, you buy a burger. The very moment you buy the burger, when the bill comes out, you see the 6% is there. So the moment you consume the service, the 6% comes in. Now, what about sales tax? Now, sales tax is based on when the goods are sold. So it's based on sales, okay? Okay. Dispose otherwise than by sale. Like just now I mentioned to you, donated, destroyed, okay? Or if they are being used otherwise than in the manufacture of taxable goods, which includes like drawing. You draw out the goods. Now that will be the moment that sales tax will become chargeable. Okay? The moment that sales tax will become chargeable. Now, so the questions that we're going to have is this. Let's say, example, if you sold something on the 19th of May 2019, okay, now that's sales. And you say you're going to impose sales tax on the sales. Now the next question is the amount of sales tax that you've imposed. Which period and when must the money be given back to the government? Now, we operate based on 2 calendar month period. That's how sales tax works. That means your period will start, example, January to February, then March to April, then May to June. Now, but it's not always January to February because it depends on when you register. So if you're going to start collecting sales tax, for example, in the month of February, then your period is February to March. So if you start in January, it's January to February. So depending on your registration, okay? But it's always 2 months. Follow, always 2 months. So if you have May to June as a period, so these will be like 1, 2, 3, 4, 5, 6. Okay? January, February is one period. Now, but you can also have the first period as February to March. So 2, 3. Then 4, 5. 6, 7. 8, 9. It depends on your registration. But the period is 2 months. Now, and you have to remit the sales tax to the custom by the end of the following month. So if your period is May to June, right, then you have to submit the sales tax by 31st July. Okay? Now, if let's say your period is 1st of April to 31st May, then you have to submit the sales tax by when? 30th of June. Okay? So just remember, 2 months, the sales tax is due, payable by the end of the following month. Okay? Now, that's how the period works. So if you say that you made a sale on 19th of May, then I'll ask you, what is your taxable period? If you tell me my taxable period is May to June, then the sales tax must come to the custom 31st July, the last day. But if you tell me that your taxable period is April to May, because May is still there, then your sales tax must reach custom latest 30th of June. So it depends on your taxable period. Okay? Now that's how the taxable period works for sales tax. Okay, turn to the next page. Now what if you don't settle the sales tax on time? How does the penalty system work? The penalty system works in this manner. Now assuming if this sales tax is to be remitted latest by 31st July, right? Okay? The first 30 days after you're late, they will add 10%. Okay? The first 30 days, 10%. Now if you still miss that 30 days, right? Then the next 30 days, 15%. Okay? 10, 15. Now, after that, you still miss, right? That's it. Maximum already. Last 15. That means the total penalty that they impose is 40%. Now, the most common mistakes the students usually do in the exam is they go and mix up this penalty with the income tax penalty. Because income tax is first you plus 10%, then you plus another 5%. Then they mix up with the period. Because income tax after the first penalty, they have how many days? 60. 30. It's different tax system. You mix up, you're going to lose out a lot in the exam. Okay? Now that is how it works for manufacturer. Now importer, don't use that, because importer, the day you want to take the goods out from custom, you settle the tax. You don't settle, don't take. That's it. You leave it with them. So that's why for imported goods, the time of declaration, the sales tax will be charged, and you have to pay before you clear them out from the customer. Okay? Alright, now just like GST in the past, you have to maintain records. So as a registered manufacturers, you have to keep records. And records that you keep include, you must issue invoice. No more tax invoice, it's not GST, it's just called invoice. Now, but the invoice will need to have a couple of particulars, which I have given down some of the example. Like the invoice must have a number, must have a date, logical, right? Number, date. Now the seller's name, address, and their ID, because registration has an ID, okay? Now the buyer name and address, descriptions of the goods, the amount payable without the sales tax rate, the sales tax, and the total. Now there's a lot more details, but this is the main stuff, okay? Now you are allowed to use electronic invoice. It doesn't need to be paper invoice. You can use electronic on condition it must be maintained in the computer system, and you must deliver it to the buyer. So it's not just generating the invoice, you have to send. Okay? Now, how long must you keep records? Now, just like income tax, records has to be kept for 7 years. Okay? 7 years from the latest date to which the record relates. Okay, so that's the overall idea. So it's much more simplified. Okay? Now, we're going to look at the idea called debit and credit note and refund to let you see what is sales tax deduction system and sales tax refund system. Okay? You must know the deduction versus refund. Now, deduction, okay, is you don't get refund, but you get a credit to offset the sales tax. Okay, you get credit to offset the sales tax. Now, it will happen when you issue credit note. Okay, so when credit notes are issued, credit note increase the debt or reduce the debt that people owe you. If your customer buy from you, you issue credit note. The person owe you more money or less money? Credit note. Okay, when the person buy from you in your account, you put it in debit or credit? When a person buy from you? Voila, hey, hello, I'm not asking very difficult, I'm asking basic double entry questions, accounting equation only. When someone buy from you, your customer owes you money, so his account is at debit side or credit side? Debit. That's what you call him? Debtors. He's at the debit side, okay? He owes you money. So when you issue credit note, then you increase the debt or reduce the debt? You reduce. That's why credit note is to credit the amount. So the debit credit, then the amount drop. So credit note reduce the debt. So when you issue credit note, the person will owe you less money. Now, why would you issue credit note? Example, goods return. You send something and this guy say, hey, you sent me the wrong stuff. He returned back. So you return back, you issue a credit note to reduce back the money that the person owes you. Now, we have an issue with sales tax because initially, when you issue your sales invoice, the sales tax has to be due and payable. So you account for the sales tax. Okay? Now, later, a credit note is issued for that sales. Then what happened to my sales tax? Because that sales tax would have been accounted for. So what do I do? Now, so what you do when you issue your credit note, right, is you will be given a deduction of the sales tax. Okay? Now, what do you mean by a deduction of a sales tax? Now, I'll give you an example. Now, let's say we are talking about the taxable period from January 19 to February 19. I don't think 19 got 29 days, sorry. Okay? January 19 to February 19. Now, let's say for that taxable period, you're supposed to have a sales tax payable of 15,000. Okay, just up to this stage, what you're supposed to do is you give 15,000 to the custom. By when? 31st March. By end of March, you issue a check and send 15,000 to custom. Now, but let's say for that same period, you also issue credit note. Okay? You also issue credit note. And that credit note comes with a sales tax deduction of 3,000. That means the value is not 3,000. If the sales tax is 10%, that means 30,000, 10%. The sales tax deduction is 3,000. So if the credit note gives you a deduction of 3,000, what you do is when you make payment to custom, you only pay 12K. You just pay the balance, you net it off. You understand? You net out the 12K. Now, what if you have more deduction than the sales tax? So I give another example, which is the next one. Let's say for the next taxable period, March to April, the sales tax payable is 4,500, but the sales tax deduction for your credit note is 6,000. Now, the sales tax deduction is 6,000. But the sales tax payable in that same taxable period is 4,500. Now, you might be thinking, oh, so the custom will return me 1,500, right? Because got extra, right? No. The custom will not return you the money, but the custom will use that amount and carry forward to the future. So the amount is 1,500, not 2,500, 1,500. So understand or not, sales tax deduction does not involve refund. It's a credit. Okay? Now, if you can issue credit note, you can also issue debit note. And instead of having a deduction of sales tax, you can have an addition of sales tax. Example, you charge a wrong price. Let's say the invoice, when you invoice your customer, the price was 20 ringgit, you're going to issue 12 ringgit. Hey, I made a mistake. Then you issue what? Instead of issue a new invoice, you issue a debit note. So you issue a debit note, you increase back the value, then you must also add the sales tax. Now that's debit note, credit note. Okay? Now the information that we need in the debit note or credit notes are more or less similar with sales invoice, with an extra information like usually you must also include the reason. Now this is one of the extra things that you're going to see, which is not there in the invoice. Why do you need to issue a credit note or a debit note? Okay, this is one system. Sales tax deduction. Okay. Now, refund. Now, refund is totally different. Because when you ask for a refund, you actually ask the custom to give you back money. Okay? So this is where custom will return money to you. Now that's a refund. Now why do you ask for a refund? Okay, one reason that you ask for a refund is because of bad debt. Okay? In order for you to claim a refund for bad debt, this is what you have to do. The debt must be written off. Written off is not the same as provision. You understand, huh? Provide is an anticipation that the person may not pay, but you still maintain the amount in their account. The person still owes you money. His name is there. Written off is that person totally cancel off. You don't even see the name. That person, you don't have to ask him to pay it. It's written off. Just destroy it. Just cancel it. Now that's called written off. So if you want to claim back that refund, you have to write it off. That means you are prepared not to collect the money back. Okay? You should write it off. Now, not only you must write it off, you also need to make sure that you have demonstrated reasonable effort. So simply writing off is not enough. You have to have evidence. Like I've tried calling the person X number of times, I've sent a lot of letters, I cannot get back the money. Okay? Okay. How do you know what's the amount of refund you're going to claim? Now this is how you calculate the refund. You take the sales tax that you have paid minus the sales tax that you cannot recover. Now the sales tax that you cannot recover, or the sales tax that you recovered, sorry, it is basically the amount that you've received A is the amount that you receive, B is the total value inclusive of the sales tax, and C is the amount of the sales tax. Now, you take out this portion as the portion of the sales tax that you have recovered. So the balance is the sales tax that is not recovered. So you ask for a refund. Now, I have an example at the back. It's easier, you just look at an example. Okay, just turn to page 349. Okay? Now, it says that Brown is a registered manufacturer and has invoiced XYZ for taxable goods for an amount of 770,000. Now, the sales tax is 10%. If it's an invoiced amount, that means this is inclusive or exclude sales tax. Include. If I invoice you, that means the sales tax is usually part of it. This must be inclusive of sales tax. Now, Brown has received 385,000 and they have tried various ways to recover the debt but fail, so they write off. Now, so two things. They have tried ways to recover and they also have written off. Okay, question now is how much refund can you claim from the Royal Malaysian Custom? Now, how much is the sales tax? If the invoice value is 770, which includes 10% sales tax, that means sales tax is 70 lah. Huh? You show the formula to calculate. Okay? It must be divide 1.1 times 0.1, right? Now, then you minus out the portion that you have already recovered. And the portion you recover is what? How much have you recovered? Now, you received 385,000. Now, out of 385 of what? Of 770. That is the proportion that you have received. So you multiply onto the 70,000 sales tax. So 385,770. Now basically you've got half of the value. So logically you must also recover half of the sales tax. So you can ask for the refund of the other half. Now, it says that assuming that after you return off the debt, right, then the customer come back and pay you 154,000. Now, then how much more must you return back to RMC? Use back the same formula. If you've got back 154 and then the total amount is 770, then that proportion $154,770, that means you have to return back 14,000 to the customer. Okay? Clear? Okay. So now I've introduced two systems to you. One is called sales tax deduction. One is called sales tax refund. Okay? Now let's look at exemption from sales tax. Just right underneath after this part, you can see I've mentioned 3-part exemption from sales tax. Now, we give exemption in 3 categories here. Okay? Okay, the first one is goods that are already exempted. There's goods that they are already exempted. Now that's one that they will exempt. That's non-taxable. Okay? Now then we give exemption to person that we divide it into 3 categories. Okay, the first category is in Schedule A. This is basically the list of person that they are just exempted. Now give example like the state government, the king. Okay, rulers of the state, they can import things and they don't have to pay sales tax. Alright? Now, Schedule B is when you are manufacturer of specific exempted goods. Then you can buy raw material that will be free of sales tax. Okay? So you can buy raw material that they are free of sales tax. Now that's because you yourself are making exempted goods. Now I give you some example of things that you make like milk product, control item. So the government is basically trying to control prices so that they don't got hiked up because of the sales tax. So they allow you to import or buy things without the sales tax. Okay, the third category is the most commonly that we will see is when the exemption apply for a registered manufacturer that they want to buy material to use in manufacturing of their taxable goods. Now, so this gives us this issue, okay? Now, if I have a manufacturer here, okay, maybe I'll use importer, easier for you to see, okay? If I have an importer here, and I have a manufacturer, now, if this is a registered manufacturer, you see, the problem with sales tax is not like GST, where they practice input and output tax. It doesn't work that way. So the importer, when they buy things, they already subject to sales tax. So imagine importer have sales tax on the things. Now, when I pay sales tax on the things that I import, what will happen is when I sell to you, I must recover the money from you, right? So what will I do? Now, if this product is 10 ringgit, if the sales tax is 1 ringgit, if I want to make 1 ringgit profit, how much will I sell you? 12. I won't sell you 11, right? Because I've just paid 1 ringgit sales tax. So the sales tax is in the product as part of the cost, so I'll sell it to you. Now, you see, the problem in that case will be like that. If the sales tax that I've paid, I pass it on to the manufacturer. Then the manufacturer will make the goods with that material that already have the sales tax and then sell you the taxable goods. Then they'll impose sales tax again. Then when the thing just pass from one hand to another hand to another hand, then it will just increase and increase and increase and increase because the sales tax is always there. Now, so end up this product, from the beginning point until the hand of the consumer, actually the product could be 10 ringgit, but because of so many times of sales tax, the product becomes so expensive because the sales tax is multi-layered. That product is not competitive. Nobody will want to buy from you for the same product that you sell so expensive and other people sell so much cheaper. Now that's why we have to tackle that issue. Now how do we tackle that issue? Okay, one way of tackling that issue is this. This manufacturer can apply exemption under Schedule C. Okay? So the manufacturer will hold Schedule C exemption. So when the importer sell to you, the importer will have to sell without the sales tax. Because the holder of this exemption, you read again, the exemption of sales tax to the registered manufacturer when they acquire material. So they can buy without sales tax. So when they buy without sales tax, then the things that they are buying, the 10 ringgit just now, the 1 ringgit sales tax disappeared. So the sales tax element is taken out. Then we don't have to multi-layer the sales tax again and again and compound it. Now then you will just use that and then you just produce and sell. And just charge whatever sales tax at your level. Now, so you will just impose whatever sales tax at your level, and that wouldn't affect you because the amount that you buy, the material you buy is without sales tax. So it solves one side of the problem. Now why only one side of the problem? Now who is having the other problem? The importer, exactly. Because importer import that time must have paid sales tax, right? So who is going to pay it back? Imagine, when I sell this item, I import 10 ringgit, I pay 1 ringgit sales tax. I'm supposed to sell to you at 12 because I want to recover 1 ringgit sales tax. I want to take 1 ringgit profit. So I'm supposed to sell to you at 12. Now when I sell to you, I sell to you 11. Because the 1 ringgit I cannot impose on you because you are the holder of this Schedule C exemption. So I don't charge back the sales tax to you. Okay, then who pay me back the 1 ringgit? Now I need to find a way of getting back the 1 ringgit, right? If not, at the end of the day, my formula doesn't ties back. So how do you solve the problem of the importer? Now, importer can refund. You can use refund system in this case, or you can use sales tax deduction. Now, if you go to the next page, you can see how the sales tax deduction system works. Now, for registered manufacturers, that if you have bought any materials that already come with sales tax, then what you can do is you can also apply back a sales tax deduction if you are not able to recover back the sales tax. Okay. The deduction is measured in this way. If the sales tax rate is 5%, you only get 2. If sales tax rate is 10, you get 4. That's it. That's how the formula. You're going to lose a bit. Okay. Now, but the 2 and the 4% is based on the total value. That means it's inclusive of the sales tax. Alright, it's inclusive of the sales tax. Okay, example. Now KEG, it's a registered manufacturer, but does not have exemption to buy raw material with sales tax exemption. So they don't have Schedule C. They don't have exemption that they can buy material without sales tax. So when they buy, they have to pay all the sales tax. Okay? So if you have paid sales tax and you don't want to impose the sales tax again on your product so that your price will not be so high, then what you can do is you can claim back a sales tax deduction. Okay. The invoice value of 31,005, which is subjected to 5% sales tax, and 60,005 is subjected to 10% sales tax. Should be 60,006. Sorry, it should be 60. Wait, let me count. 60,006. Let me see if it's 60,005 divide 1.1. Okay, yeah, that's fine. Okay, that's 55. Now, so what happened is you will get a sales tax deduction that is based on 2% and 4%. Now, you see the sales tax is based on 30 plus 5%, which is 1,005, so become 31,500. You see that? But you only get back sales tax deduction 630. So for paying 1,005, you only get back a deduction of 630. Say, wow, that's like I'm losing a lot. Then my product will be so much more expensive because of all the taxes that I'm going to charge back on customers. Yes. So if you want to avoid that, then you should go for the exemption system under Schedule C. But you know, some businesses, their activities is not so big. They don't want to go through all that. Now, if you don't want to go through all that, then this is a much more simplified system for you. So you just got to go for it, and you have to bear the limitations. That means you don't get all. Now, like in this case, you will have got 55,000, and you have add 5,005 to come to 60,005. So your sales tax will be 5,005. But when you claim your sales tax deduction, you take 60,005 times 4%, you only get back 2,420. See again? 55 is the sales tax, but deduction is 2,420. Now, assuming for the same taxable period, KG has sold 24,000 units of the product at 6 ringgit and 6,000 of the same product to the subsidiary at 4 ringgit. How much is the sales tax payable to RMC, taking into account the sales tax deduction above? Now, so first you must calculate what is your sales tax. Now, I didn't put a rate there, so probably I'll put a rate here. So let's just assume that the sales tax rate is 10%. Okay, that's the normal rate that we apply, 10%. Now, so you're supposed to take 24 times 6 plus 6,000 times 6 as well, right? You must use 6 ringgit and not 4. So that means for that period, your sales value will be 180,000. Now if you take 10%, your sales tax payable is 18,000. But your sales tax deduction will be 3,050. Now, 3,050 comes from the figure up there. So you only pay the balance. Okay, so the logic is, when you buy this item, even though you have paid your sales tax, even though you have paid 1,005 and 5,005, you actually get back 3,050. So you must account for what you're getting back. So when you charge your product, you must factor that into your pricing so that you don't have to charge so much higher. Now, of course, you say that I can charge any price I like. Of course, you can charge any price you like because it's your business. But end of the day, will people buy your product or not? It's like you're selling a bottle of mineral water. Everybody is selling the same bottle at 70 cents and you want to sell at 1 ringgit. You say, I want to charge higher. Yeah, 1 ringgit, but if people are not buying your product, what's the point? Now, that's why you have to account for it properly so that you can really bring down the cost and charge the lowest to what you want. So the reason why you increase the price must not be because of the taxes. That's the whole idea. Okay? So that is how the system works for us. Alright? Now, the last thing. Now we have this thing called special area or designated area. Now designated area is basically Langkawi, Labuan and Tioman. Special area will be free zone, licensed warehouse, licensed manufacturing warehouse and joint development area. Now, why are we telling these areas to you? Because for purpose of sales tax, right, the definition of Malaysia exclude all these areas. Now, because these are not technically part of Malaysia for purpose of sales tax, so if you have any taxable goods that is imported or sold in this area, right, you don't have to impose sales tax. Now, but not everything. There are exceptions. These are the exceptions that sales tax will still be imposed. Example, if you impose marble, okay, anchovies into Langkawi, motor vehicles into Tioman, imported goods that's in Schedule A that you will actually be used in the designated area, the special area, alright? Now, importing wine, spirit, beer, tobacco into this Tasik Kenyir duty-free. That duty-free, that particular one, that the wine and tobacco is not given exempted, okay, exemption. Now, these are special area, designated area. Now, that's it, that's sales tax. It's a much more simplified way compared with GST, okay? Now, let's go on to the next part. Okay, what about service tax? Now, why do we impose service tax on services that we offer? Now, this is the most important thing you must remember. The list is long. Okay? You see, in the past, when we talk about GST, we only tell you threshold. Anybody exceed that, you got to register for GST. Then you impose. Anything you do, there will be GST. Service tax is a much smaller scope. They have to list it down. If your service is inside, then you will have to charge 6%. If it's not, you don't. Alright? Now, how do you define whether they are in or they are not in? Okay, this is what the law tells us. Number one. Now, if you provide taxable service in Malaysia by a registered person, or if you import any taxable service. Okay. So, question is, how do I know whether I'm offering taxable service and whether I am a taxable person? How do I know? Okay, whether I'm offering taxable service or whether I'm a taxable person. Now, you have to refer to the first schedule of service tax regulation. Okay. Let's go to the last section. There's no page number because I just attach it. So you got to follow with me, okay? If you see there's a page, actually at the bottom is called page 1 out of 18, okay? Okay, now notice they define taxable person in the first column. So if you fall into the first column, you are here. But not everything offered by you, we will impose service tax. You must be also under taxable service. So if you have services that they are not taxable, they will not attract 6%. And this is your threshold. And you notice the threshold is not always 500, mostly 500,000. Okay? Now, what is the first group? Group A. Group A is for who? What kind of business that you're doing if you're in Group A? What business is that? Hotel. It's basically hotel. Okay? Accounts. Now, so if you have accounts, and it doesn't matter in what manner, see, hotel or house or service apartment or homestay, it doesn't matter. So you say, oh, I have 20 unit and I operate homestay. Now then the next question is, how much is the value you achieve? If you exceed 500,000, then you have to be taxable. Then you must register. Then you charge 6%. Okay? Now, but you notice in the list of taxable person, they also include exclusion. So there are people that they actually excluded so that you don't have to be registered and you don't have to impose service tax. Exclude who? Now, I just highlight the main thing. Okay? Private higher education. Private higher education. So we are talking about what? Hostel. So if you have a college like MCKL, our account, we don't charge 6%. Why? Because we are under this category. But you notice it's only for private higher education. If you are not under private higher education, then you still have to impose 6%. So if you go and do a primary school which is not under higher education, you realize that 6% will still be required. Okay? Now, another group is, they say, if it's provided by who? Religious or welfare body. So if you have a religious body that operate the hostel, the account, you don't have to register. Okay? Now, what kind of service that you offer that we charge 6%? They say the account service, alright, except. So the exclusion is very important because in the exam they will give you a list one. Then you see if this one charge and one don't charge. Now except if this is an accommodation that you're giving it to your staff. So the staff will not impose 6%. Okay? Now, and I want you to take note that they say the provision of any other taxable services in other group. So later when you go to other group, you realize that they define a lot of services that happen to also provided by you. You also have to impose service tax. It's all together. Okay? So not just the account, everything. Now, like if you have a restaurant in a hotel, now then the restaurant will also need to impose 6%. Because any other services in other group, but it comes under you, then it will also be taxable. Okay? Now, and then they also says that the provision or the sale of tobacco and alcoholic and non-alcoholic beverages. So selling food, drinks, selling tobacco and drinks, and non-alcoholic beverages. That means you sell Coca-Cola also 6%. But if any other things is not there, then don't have. For example, if you say the sale of souvenir, or you find that it's not in the list, okay, then souvenir will not get. But you say, what if my hotel provide massage? Then you got to see later, does massage fall into one of the group of a taxable service? That will go on and we'll see, okay? Okay, the first one is hotel. Next page. F&B. F&B generally is what? Restaurant. And restaurant only taxable if the threshold is what? 1.5 million. It's much higher. Now, we will exclude if the canteen in educational institution or canteen operated by religious institution. So, school canteen, you don't have to register. Our college canteen, you don't have to register, because we are within. They say canteen that is located in the education institution. It's not saying that the canteen owned by the college. No, our canteen doesn't own by us. It's operated by other people. But because they are in education institution. But for religious institution, they have to be operated by the religious body. So it's not to say that you have let's say for example, you go and build a cafe in a church, or cafe in a mosque, or cafe in a temple. You say, oh, I'm exempted, I don't have to register because it's in the church, in the mosque, in the temple. No. If you are not operated by a religious body, you still have to register. But if you say, for example, now there's this religious body want to set up a restaurant out there, you go to Brickfields, inside New Central, you open, you still exempted. Because you are operated, but must be a canteen. Canteen, okay? Canteen is a canteen, it's not a restaurant, okay? Now, it must work like a canteen. Now, and if you notice the taxable service that you offer, right, is the food and drink, and any other taxable services that is in other group, they're together. So you say like, my restaurant offer manicure. Got right? That China steamboat, that while eating steamboat, they give you a lot of other services. They'll be thinking, so if that manicure is being charged, do you have to add 6% on the service offered other than the food? Now then you have to see, does all that fall into other taxable services? If yes, then they have to be included. Now, and you notice this part, D, provision of sale of alcoholic and non-alcoholic beverages. What's the difference? Wow, very good, huh? Do you smoke? Oh, I thought you were so sharp. Ooh, okay. Now, cigarette is not here. That means if you go to a restaurant and buy cigarette, there's no 6%. You go to a restaurant and buy beer, there'll be 6%. You go to a hotel and buy cigarette, there will be 6%. Because hotel include tobacco. And this one does not include tobacco. So you must see what are taxable in your category. Okay? Now, next. Okay, these are all the not very healthy things. Don't laugh, there's a lot of things you probably won't know. Okay? For example, nightclubs you probably know, dance hall you know, cabaret you know, health and wellness center. I always amazed with the way they categorize it. It's called a health center, but they put it with nightclub. So is it healthy or not healthy? So I think technically we know what kind of health center. And massage parlor. And what's the public houses? You don't know, right? What's a public house? What's a public house? A house or a public, right? A public house is what you call as a pub lah. Pub ma. Pub is a short word for the long word called public houses. You learn a new word, right? Next time you ask your friend, hey, want to go public house or not? You're talking like an alien, okay? Now, and beer houses. Now, anyway, for all these kind of businesses that you're doing, you have to register yourself with a threshold of 500,000, and you notice that this is a list of taxable services which include tobacco and alcohol and non-alcoholic drink. Now, I just want to highlight the part that when they talk about health and wellness center, so when you go for your facial, facial is you can call a wellness center, for example, massage parlor, okay? Now, all these things are actually registered taxable person, except if this is under private healthcare. Now, that's the proper one. Okay? Private healthcare. So, you know, if let's say in the healthcare center, they have a physiotherapy center. Now, that is not required because it's under hospital, all right? They exclude it. Now, and if the facilities is being managed under university or colleges for healthcare purpose, so they are also excluded. Okay, this club is a rich man club, private club, all right? Or golf club. These are the rich man club. Now basically all the services offered within the club, and the threshold is 500,000. If you go down, golf course is there. Golf course or golf driving range, okay, with the same threshold of 500,000. Now if you go to the next page, if the business is to do with gambling, that you are licensed to do things like lottery, gaming machine, slots machine, then you realize that there will also be 6% being imposed. Okay? Now it's imposed on the betting, not the winning. So the betting is the taxable service. So when you place a bet, the government will impose 6% on the value that you bet. Okay? Okay, now Group G is for professionals. So there's a long list here, okay, very, very long, alright? Now this list of professionals, you must understand, you may be falling into different category of a person with different kind of taxable services, but when it comes to measuring of the threshold, we actually will look at it combined or singly, that is more than 500,000. That means you say, if I offer accounting service and I offer legal service, because accounting and legal is actually under a different category. But when it comes to calculating threshold, they are all together. I will not say accountant one side, then the legal service one side, and then you separate. No, they are all measured together. Now, we just run through the list of person. Now, so generally we have lawyer, normal traditional lawyer or the Sharia lawyer. Okay, now we have accountant. Next page. Surveyor. Alright, surveyor. Engineer. Architect. Consultant. Now the exclusion I won't run through because it's not relevant to you. So generally consultant. People who offer IT service. People who offer management service. Now the next page, employment service, private agency, okay? Now these are the person. These are the person. Now what kind of services that they will be taxable? Now then you have to go through the long list of taxable service, and you notice that they have a general exclusion. Alright, the general exclusion is like when services involve outside the country, then they don't have to impose. For example, they say, if you have legal services, but you see, they always exclude when this is services to do with goods or land situated outside Malaysia. So if let's say somebody wanted to buy a piece of land in Australia and they get your service for that, you don't impose 6% on that because this is concerned with goods or land outside the country. Now, it repeats, so I don't have to repeat again and again. So generally, they tell us about legal service. Now, they also tell us about all sorts of accounting service, accounting, auditing, bookkeeping, all that. Now, all sorts of surveying service, okay, or the valuation service. Now, engineering service is just tying back with who you are. Because if you're a professional engineer, then you offer engineering service. Then you come down, they talk about architectural service. Now, consultancy service. Okay? Now, when you say consultancy, then you also say, is doctor consultant? Is a doctor consultant? So after you see doctor, when they charge you, what do they charge? Consultancy fee, right? So then, do we impose 6% or not? Now that's why they put an exclusion here. They say, exclude if this is a consultancy fee to do with healthcare or veterinary service. So I think that one is a bit specific, so I highlight to you. So if you bring your pets, go and see doctor, you realize that 6% is not there. Okay? Now, and it goes on and says IT services, management services. Now, and there's a long list of management services if you see, like project management, maintenance, warehouse management, and stuff like that. So the list is actually very long. Now, but I want to focus you with the exclusion. Okay, exclusion. Now, these are those services that they will not impose 6%. Now, one, if it's to do with management services connected with what? Land and building for residential use. So that means if you stay in a condo, they realize that you pay maintenance fee, right, for the running of all the facilities. Now, that one is not, because it's residential use. Don't have. Okay? Now, if you come down, then you notice that they also mention if this is management services that is meant for religious, welfare, bereavement, burial, cemetery, cremation, sewerage, water supply, all that kind of thing, health, transport, tourism, logistic, they are also excluded. So basically now when you die, the 6% will not be imposed. Because I remember before that, the old opposition always joke and say die also must pay GST because your coffin got GST. So now they're trying to tell you that, now when people do services for you when you die, don't worry, there's no service tax. Okay? Now that was the whole idea. Now, okay, then the employment services. Okay? Security services. Now, these are all the services that fall into this group. Okay, there's a long list. See, the problem with service tax is like that. You must know what's in the list. Sorry? Of course. Okay? Now, Group H is for credit card. Now, credit card, it's a bit different because credit card, they don't charge based on 6%. They charge at a fixed rate. And the rate of credit card is how much? 25%. 5 ringgit. Where did I put the notes? Page 353, I actually stated there that service tax rate is 6% except credit card, because credit card is based on 25 ringgit per card. Okay, now that's credit card. Now, so nothing much about credit card. Okay, you know, insurance is a taxable person, and we charge 6% on all types of insurance, all for any risk to individual. But go on to the next page. Exclude medical insurance and life insurance. So if you buy insurance, right, medical card, you don't pay 6%. Life insurance, you don't pay 6%. But if you go and buy any other contract, let's say I go and buy a personal accident, you will expect 6%. This is the only two that they exclude. Okay? Now, and if you buy insurance under business, all the business insurance, they will have to impose 6%. Okay? Now, going down. Telco. So if you notice your Maxis bill, your DG bill, there is a 6%. If you didn't realize, it's because you're not paying, so you go back and tell your parents, from today onwards I'll pay. Then you know that 6% is there. Those who pay their own expenses will know what they have 6% and what they don't. It's because you don't pay. I don't pay. Who cares? Because you're not, okay? So you won't know. But if you pay, oh, now I realize 6% is there, 6% is not there. Now, the next one is forwarding agent. Now, forwarding agent is people that they deal with clearing goods. That means they are those people who help you to take things out from custom. Remember just when I told you? You want to take things out from custom, people help you to settle the work. Now, and do you notice that this one has no threshold? Nil. Okay? Now, moving down, parking operator is also taxable. Okay? Now, anything to do with repairing vehicle, the service center, if you send your car to service, like Toyota, Honda, Kia, all that, okay? Now, next one, courier. Now, courier service is also taxable. So if you go and do post laju, you realize that there's a 6% being imposed, but we exclude courier the moment when they involve outside the country. Anything from outside to outside, from inside to outside, from outside to inside. So the whole idea is you see outside. When there's outside, there will not be 6% anymore. Okay? So anything with outside, there will not be 6%. Now, people to do with car hire, renting car, chartering buses. Go down. Advertising agency. That's why if you put advertisement in a newspaper, there'll be a 6%. Now, this one a little bit complex. Electricity. Electricity is what? TMB. Okay. But they only charge who? domestic consumer. That means us at home. If you're in factory, you are not domestic already. You don't have 6% one. So it's only domestic consumer. Factory don't have because they are not domestic. Now, even though domestic, they say other than domestic consumer in designated areas. So if your house is in Langkawi, you don't have 6%. Your house is in KL, you might get 6%. Now, I say might because they exclude the first 600 kilowatt on a 28-day cycle. So they calculate 28 day. In that 28 day, the first 600, they don't have 6%. That's why they are basically telling you if you're a poor person, you don't use a lot of electric, then you don't pay 6%. But if your house got a lot of aircon, a lot of things, you use a lot of power, then you use up until like thousands kilowatt, then you're rich, you can afford, right? Then we'll add 6%. So that's a bit complicated because there's a threshold bar. About the first 600 we don't charge, after that we charge. But it's only on domestic. If you're not sure what I'm saying, just go home and tell your mom, Mommy, give me your electric bill. She said, why? I want to pay this month. Okay? Then you know. How much average electric bill that you're paying a month? Do you even know that? If you don't even know that, please go home and start to know, because a lot of things you thought that is free. Alright? Sometimes you live like as though you're free. You know, a lot of times, a lot of kids, as they come to a certain age of life, they want to tell that, hey, I want to have freedom of my voice, you know. Hello. Don't talk freedom until you have the financial capability. Okay? Even the bed you're sleeping on is all paid by your parents. So please don't talk freedom first. Alright? Until you can stand on both foot, then you can talk about freedom. Please go back and find out how much is the electric bill. Okay? Now, this is to do with airline. Okay? Airline. Now again, if it involves outside Malaysia, don't have. Alright? Now, next page. Financial services that is to do with brokering and underwriting only. So not all financial services. That's why you go to a bank and you open bank account, you realize that they don't charge you 6% because that's not brokering or underwriting. You see not? You must look at what is it. You apply a loan, there's no 6% because that is not under brokering or underwriting. Understand? No? Now that's why you must see what are you. Okay. Then cleaning. Okay, cleaning service. Now cleaning service also must impose 6%, but exclude if the goods, the land or the building is for religious, educational, residential and agricultural purpose. And they also exclude laundry service where the machine is operated by coin. You know, that kind of self-service laundry. Okay, now that is all excluded. So it's a long list because that is how service tax works. They have to tell you exactly who are taxable, what kind of service are taxable. Hey, I'm not done there. I only go through schedule 1 only, I'm not finished. Why you all start packing the notes? Hello. Okay, please go back, alright? Wow, scary man. They assume I finished all packing already. Okay, go back to page 351. And here we go, we start all over again. You say, wow, what man? I thought we just finished the last page and we start back with the title called service tax. Okay. For group. Okay? Group. Now you only need one application even when you offer 2 or more taxable services. So it's like if I am a hotel and I have a restaurant and a massage parlor, so I apply 3 registration, right? No, you apply 1, and they are all lumped together, okay? Now, if you fall as a group, so do I have to charge service tax for intra-group services? Now, example, if you have a restaurant, a company operate a restaurant, then you have another company operate other things, then the staff come to the restaurant and eat, then you say the company will pay. So inter-company, we paying for the food. So because we're in a group, so do I have to charge 6% on the food? Now, this is what it says. For intra-group services, we only exempt you out from service tax if you are under group H, G, okay? Group G is the professional services, the long list that we see just now. The lawyer, the accountant, the engineer, the surveyor, consultant, management service, employment agent, that one. Now only in group G, and it's only under the heading A, B, C, D, E, F, G, H, I. In column 2, you must go back and see, okay? Which generally apply to most of the first part, okay? Now, they say you don't have to impose 6% if they are within the same group, okay? You don't have to impose 6% if they are within the same group. But you must read point 8. Okay, you must read point 8. Now, what is point 8? Point 8 says, if the company provides taxable services in point 4, they also offer to another person outside the group then the same service that they offer to the company outside and within the group are taxable. Now, take example. Let's say company and sub-C 1. Now, they offer accounting service. And that's it. It's only in the group, not to outsider. Now, this is not taxable. But now you have a sub-C that you offer accounting service to outsider as well as to your own people. Now, of course, this will impose 6% and this will also impose 6%. That's what it means. So, if you serve people outside, then everything is taxable. So, the only way to enjoy the exemption is you must be in the group and you don't serve people outside. Now, what do you mean by a group? Okay, you will be in a group. If you go back to page 352 and look at point 7, just go up, okay? Now, you will be in a group if you have more than 50% share. So, anything with more than 50% share is called a group, which is a subsidiary, right? Now, but they also want you to understand that you can still be part of the group if your shareholding is between 20 to 50. So it's not a sub-C, it's 20 to 50, it's not a sub-C. But you have the power to appoint or remove all or majority of the directors. Now, must be all or majority of the director. If you only say you have power to appoint one director but it's not majority, then fine. Then that's not group. But if you have power to appoint or remove all or majority of director, and even if you only hold 20 to 50 as an associate, for example, okay, then it will still be considered as a group. Okay, so that's the whole idea about group, whether we impose service tax or not. Okay, please come to page 353. Now, a lot of same things I won't repeat. Registration requirement is the same. So how do you measure historical sales, prospective sales, registration due date? Same. Okay? Now, it's the same rule if you have artificial separation. So I don't have to repeat. Okay? Service tax is based on 6%, just one rate, 6%. Now, but the question is, what is the value that you use to times the 6%? Now, the value is like this. If the person is not connected with you, that means it's not related to you, you follow the actual price. So, the actual selling price, okay? But if a person is connected with you, related party, then you have to use the price that you would have imposed if that person is not related to you. That means you're using back market value, arm's length value, okay? You're using arm's length value. Now, if you offer services for free, then you have to use again the arm's length value. For gambling or betting, is the value that the betting or gaming as they prescribe. That means they will state, like to gamble, you have to put 1 ringgit, something like that. Okay, then the 1 ringgit is the value. Now, for imported taxable service, is the value of the taxable service as prescribed. Now, that is how we determine the value. Now, what about taxable period due date is the same. 2 months, settle the following month. If late payment, 10%, 15, 15. Okay? So, no different. Now, invoice, debit note, credit note, duty to keep record, it's the same. Okay? Now there's something a little bit different. Disbursement and reimbursement. Okay, what is a disbursement? Now let's say I'm doing a service on your behalf, and my service is taxable, so I actually have to impose 6%. But what happened now is this. I will have to go to, let's say, an authority and make a payment on your behalf. So I will make payment for you. Now, when I make payment for you, I will pay and then I'll take the money back from you. So I'm doing a disbursement on your behalf. That's called disbursement. Alright? Now, it's like, for example, you ask me to help you to renew your road tax. So I go to JPJ, I renew the road tax. But when I pay JPJ the value of the road tax, that's not my expense, it's your expense. But I'm just paying on your behalf. Realize or not? Now, that is what we say a disbursement. Something that is incurred on behalf of your client. Okay? Now, what you have to remember is disbursement does not constitute taxable service, so you don't charge service tax. So the 6% must be imposed before the disbursement. So the disbursement is always after the 6%. That's the whole idea. Just remember. disbursement does not include service tax. Now, but reimbursement is subject to service tax. So if you look at an invoice, right, basically the services you offered, let's say 5,000, the reimbursement, let's say 200, the 5,002, you'll add 6% of the 5,002, and then you have your disbursement, which does not attract 6%. So that's all you need to remember. Disbursement, no service tax. Reimbursement does. Okay? Now, refund mechanism is the same. Okay? Now, go to page 355. This is the exemption. Now, if you fall in Group G, which is the professional services, you realize that when a taxable person offers service to another taxable person, it will be exempted. Okay, example. Now let's say there is an accounting firm and there is a tax firm. Now if this accounting firm is registered, this is registered, when they offer services, you realize that this service you will offer to be exempt from service tax. So the whole idea is to avoid a double charge. Because let's say this is your actual client. You imagine if I add 6% on the service, then later I come here and add another 6% on the service. The same service, you keep adding 6%, you see. That's why now they tell you that because if you are in the Group G category, because both of you are registered, you don't have to add 6%. So whatever you charge to the other side is without 6%. Then that person will just add on whatever 6% by themselves. Now, but let's say, okay, there's a management services offered to, let's say, a legal firm. Now, assuming that this is not registered. Sorry. This is not registered. This is registered. Now, then you realize that we will add 6%. Because the legal firm is not registered. See that? This is exempted because the other side is registered. So you just got to know, alright? All that is just to make sure that there will be a single stage service tax being operated. It's just so timely. It's time to go. Yeah, you can go. I never force you to come. What? Did I force you to come? I never force anybody to come. But just look at the results. Look at the test result. It's so encouraging, man. More than 50% flung. So encouraging. I'm so happy. I'm just looking at the one who passed. Wow, I'm so contented. Okay? Excellent, man. Okay. So clear? Now this is basically the part on sales and service tax. So I'll finish on this. In your exam, you will definitely have one question. 10 marks, for sure. Okay? Yeah. So just make sure you go through again. Thank you very much.